What's up, guys? Gerald here. In this video, I'm going to go over JD stock and whether I think this company is a buy. So if you don't know, JD stock is a core e-commerce player in the Chinese markets. It operates pretty much solely in the Chinese markets. It also is in the supply chain and logistics here. So JD stock year to date is down 8%. On the 5-year chart, it's down nearly 50%. So the stock is currently sitting at a price to earnings of 8.05. And I'm going to go over whether I think the stock is undervalued, fairly valued, or overvalued here. To first analyze the stock, I want to perform a SWOT analysis. I want to know what's good, what's weak about this company, what opportunities this company have, what are the threats of this company. So JD stock, like I said, operates in the e-commerce sector. This is a core player in that sector. So they're able to maintain strong revenue growth, roughly around 8.9% year over year in Q1 2025 with improving margins, right? So that's exactly what I want to see for any company that's trying to take market share from a core player such as Alibaba or PDD here. So this is a company with consistent double-digit earnings growth as well as operational excellence, which makes it a reliable market leader here. Like I said, this company is also in the logistics and supply chain, and this is a company that excels in that. JD's proprietary logistics network enables a fast, reliable delivery, often within days, which is a critical differentiator from other companies in that competitive market here. This is a company that is very financially resilient. They have $28.8 billion in cash with minimal debt. So that amount of cash, they're able to use that cash in many different growth initiatives, one of which that they're currently doing is with the food delivery while maintaining that financial stability. So that liquidity will allow strategic pivots without compromising their core operations here. That food delivery business is going to be both a double-edged sword, which we'll go over in a couple moments here. This is a company with diversified revenue streams as well. They have services revenue growing at 14% year over year in Q1 2025, which was driven by logistics as well as their new ventures here. They were able to expand into food delivery as well as the initiatives like the RMB 200 billion export to domestic program, which was allowed them to get away from just traditional e-commerce. As far as the weaknesses, like I said, JD is aggressively expanding into food delivery. With that aggressive scaling and expansion for this segment of JD, they've been incurring a lot of significant losses, right? They reported a RMB of 1.3 billion operating loss in Q1 2025, despite an 18% revenue growth. Another big weakness for this company is that a lot of their revenue, let's say the majority of their revenue is concentrated within China. So over 90% of revenue comes from directly China. So there's a lot of volatility that can happen if China's market is not able to grow. As you guys probably know, China is in a deflationary period. What is a deflationary period? A deflationary economic cycle is one of which economic growth, economic spending is stagnating, decreasing. A lot of people in China are just saving just due to what's going on in China in terms of the property crisis, as well as just people's concerns about where the economy is heading. There's also the US-China trade tensions. So there's a lot of concern about how that's going to affect the whole China economy, and that's affecting the stock price. With the trade tensions as well, that is also poses a risk for potential delisting from the United States exchanges. If you were invested in JD stock here as a United States investor, there's no issues. It'll be transferred over to the Hong Kong market. But like I said, if being delisted from a United States exchange will eliminate a huge part of liquidity that will ultimately drive down the stock price for the short term. I think as a long-term investment, it poses as a very, very strong investment, but that is a major concern about JD stock as well as any Chinese stock for that matter here. For the stock's intrinsic value, it sits around 46.75, so it's nearly undervalued by 46%. So it's offering me a huge margin of safety, 40+% margin of safety, as well as just understanding the stock is just very, very undervalued from today's valuations here. In terms of hedge funds and institutions in the prior quarter, I'm seeing overall bullishness as compared to bearishness. 58% bullish as compared to 42% bearish. 11.9% open, 36.1% increased, and 10.4% held their positions here. In terms of the bearish side, 30.2% decreased and 11.5% closed. In terms of significant super investors and hedge funds, one of which is David Tepper, a significant super investor, well known in the investing world, decreased his position by nearly 23.1%. He's up about 3.7% with an average buy price of 30.88. He has 300 plus million into this company with about 4% of his portfolio. Lazard Asset Management decreased roughly about 11.4% with 200 million plus into his position, only has about 0.3% of his position. In terms of hedge funds and institutions, I don't see much super investors that are investing into a company like this. Like I said, most super investors will trade into core dominant players such as Alibaba, one of which that also has a much more diversified revenue stream than a company like JD. So that's the difference between a company like Alibaba versus JD here. But let's see what Wall Street analysts say here, and let's go see whether I think the stock is a buy or not from today's valuations. The average Wall Street price target for JD is $48, so about nearly 50% upside, with the lowest price target around $39. So offering still a 20+% upside from today's valuations here. We have a consensus buy and hold in this company, 5 buys, 1 hold amongst 6 Wall Street analysts here. In terms of insider trading, I don't see any significant selling, which is always a pro here. I don't have any concerns from an insider standpoint. I also don't see any huge buying from insiders, but overall, I don't see any selling, so that's a great thing to see here. In terms of the company's revenue, the company reported a $165.71 billion in revenue with a 14.8% revenue year-over-year growth. This is a company that is free cash flow positive consistently. Last quarter reported $5.53 billion with a 14.22% free cash flow yield. In terms of profitability metrics, I'm seeing 6.89% return on assets, 4.65 return on equity, 14.56 return on capital employed. Like I said, the margins are improving for this company. This is a company that went from 3.6% margins to 3.8% margins. The gross margins went from 15.9% to 16%. So I'm seeing improving margins, which signifies to me that the company is taking market share from the likes of Alibaba here. Balance sheet looks excellent. I'm seeing $93 billion in assets with $50.85 billion in liabilities. In terms of shares outstanding, this company was reducing its share count in the most recent report. They did increase their share count slightly. It's still sitting roughly around 1.545 billion shares here. Let's hop on to the technicals for JD stock. Like I said, I always want to take a zoomed out approach when I'm analyzing these companies on the technical time frame. So I have JD stock sitting on the daily time frame, zoomed out here. I see the stock currently sitting below both the 50 and the 200 moving average. So short-term bearishness, but overall, I'm seeing an RSI divergence. So the price action has gone down, but I'm seeing upward slope in the RSI. That signifies to me that sellers are weakening and that we're positioning for a reversal to the upside here. So that's a good standpoint. I'm seeing the stock sitting at essentially at a major demand here. Every time we got into this area, we found significant buying volume. There are areas where it got rejected from, but overall, we got capitulated, got above it, and we're sitting at a full retracement towards golden retracement around the 0.5 to the 0.618 retracement here. And the stock looks like it's making its way up into the 50 simple moving average here. So I think it's about sitting roughly around 3% away from this 50 simple moving average. If we can overcome this area of resistance and use this as support once it gets above it, I can see the stock easily retracing back into the 200 simple moving average. If it were to do that, that offers nearly 15% upside. Like I said, the stock's intrinsic value is sitting all the way about 45% away from current valuations, but I like this position for take towards 200 simple moving average price action reversion right there for nearly 15% gains. So that is my analysis on JD stock. If you guys want me to analyze any other stock, go ahead and shoot down the stock in the comments below. Leave a like, comment, and subscribe. Take care, guys.